either way, I think it's a good thing for Bitcoin, because if the government is able to cut costs, then you can get things in line. That's good for the economy, and the economy goes up and our portfolios go up. But if they're not able to cut spending, after Doge, they said, okay, we're going to back off of Doge because everybody hates it. They said, okay, we're going to focus on growth instead.
So we're going to go the opposite way.
Exactly. We're going to go the opposite way. We're going to forget about expenses.
We're going to spend more. We're going to grow our way out of it.
Exactly. The only way to do it is grow our way out of it, which of course means money printing. So as a Bitcoin holder, that says to me, either road we take will be good for Bitcoin. I mean, it might lead to the collapse of the country, but Bitcoin will be doing okay.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where financial freedom is just one bull market away, allegedly. I'm your host, Jay Hamilton. It's Wednesday, October the 1st. The U.S. government shut down for the first time in nearly 7 years. What does this mean for markets and your portfolio? Despite all the institutional adoption talk, Bitcoin hasn't really kept pace with traditional assets this year. Today's guest is going to break down the macro forces behind this underperformance in comparison to gold. And also, is the Fed's monetary policy the real driver of all asset classes? Or are crypto investors overthinking the macro narrative? We're going to dive deep into what really moves markets. Today's guest is Trajan King. He's the former CEO, COO, CFO, currently CFO of Zilix.com. He's worked in Silicon Valley. He's worked on Wall Street. He's worked with some of the largest tech companies in the world, negotiating multi-million-dollar contracts and leading major financial products. Before we jump in, if you wanted to know what was happening with the U.S. government shutdown before this episode came out, earlier today, the Milk Road Macro team released a newsletter all about their takes on the U.S. government shutdown, what it means for you. Is it a risk to your portfolio or not? So if you haven't read that newsletter, highly recommend you do. It's free. Click the link in the show notes to sign up today. Today's episode is brought to you by Nexo, the platform that grows your capital without locking it away. It's also brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. With that, Trajan, welcome to the Milk Road Show.
Great intro. Thanks for having me. And I need to go read that newsletter about the government shutdown. It's been an exciting day already.
It's funny to say that the government shutdown is an exciting day, but it is. It certainly does. Yeah, it certainly does create a lot of news and a lot of people wondering what's going on from the market's perspective. Let's actually let's start there. Can back up for a second. What happened with the government shutdown? Can you quickly give us a little bit of the context, and then we can talk about what the impact might be?
Okay, so like you said, the last government shutdown was in 2018, lasted 34 days, which was the longest government shutdown that we've had out of 12. And the government the last few years has been renewing the budget every year, and it ran out last night at midnight. And the Republicans and the Democrats weren't able to come to a consensus about renewing the budget. So by default, everything froze. And by everything, it means non-essential services like, of course, Social Security and Medicare and emergency response and all of that. About 70% of the government is actually still funded and functioning, but it's the 30% that is currently on hold or not renewed until the Democrats and Republicans can come to a consensus. And whether that will happen soon or not, we don't know. Polymarket has the odds that it's going to last 8 days. It looks like the Democrats and Republicans both have their reasons for making it go longer. We'll see which one caves. On the Republican side, the Republicans are able to lay off and not pay permanently, get rid of a lot of government employees, which is one of their main things that they've been talking about for years, is trying to reduce the size of government. We saw with Doge, they tried to do that earlier this year with mixed success, I think. And then the Democrats, they want to give healthcare to everybody, and there are a lot of different sticking points about what that means and who that covers and whether or not it should cover people. So we'll see which one caves first, if they're going to come to an agreement or not. our Kobisi letter had some interesting stats that they released last night about the length of the shutdown, which I think is pertinent to cover here, about what it might do to the market. I'm actually surprised the market is up as much as it is at the time of us recording this. Bitcoin is up 3%, and Solana is up 5.5%, and Ethereum is up almost 5%. So I don't know what the other markets are doing, but it's a bit of a surprise. We can talk about what that might mean. Okay, so the average length of the shutdown is 8 days, and the S&P 500 has ended the year higher after a shutdown 86% of the time, and we're already seeing that in the first few hours. And the S&P posts an average gain of 13% the year after a shutdown. So long term, shutdowns have, by and large, almost completely been beneficial, especially if you are a Republican seeing the opportunity to cut costs with the U.S. federal debt going over $37 trillion and adding a couple of trillion a year now. That's one of the reasons why our bonds have become a lot less preferable, and why the government has actually had a hard time selling the bonds. And foreign nations like China and Japan and others are buying fewer and fewer bonds. They're offloading the bonds and buying gold, which I think we're going to get to gold pretty soon. So some see this shutdown as a good way to actually cut the size of the government. And so in 2018, during the shutdown, the S&P rallied 11%. And so while the government shut down, the U.S. defers $400 million a day in cost. A lot of that is labor cost. So if the government stays shut down for less than 60 days, say the shutdown lasts 8 days, like it does on average, after those 8 days, all of the government employees that were on pause, they get all of their back pay. But if it lasts more than 60 days, 61 days, then the president is able to lay off permanently all of those people and not have to pay them. So there's some incentive for the Republicans to drag this out to last 60 days so they can reduce the size of government, which they've always wanted to be. You probably followed the Doge efforts of reducing size of government, and that was kind of a failure, some success, but mostly what it said to me as an investor, it said to me that the government, whether Democrats or Republicans are in charge, will never be able to stop spending. And as a Bitcoiner, that says to me, like, long-term trend is money printing from here till the government collapses. So either way, I think it's a good thing for Bitcoin, because if the government is able to cut costs, then you can get things in line. That's good for the economy, and the economy goes up and our portfolios go up. But if they're not able to cut spending, which they pretty much
they can't.
After Doge, they said, okay, we're going to back off of Doge because everybody hates it, especially the Democrats, but some Republicans. Like, it wasn't very popular, even though it was trying to cut waste, fraud, and abuse. It was very controversial. They said, okay, we're going to focus on growth instead.
So we're going to go the opposite way.
Exactly. We're going to go the opposite way. We're going to forget about expenses.
We're going to spend more. We're going to grow our way out of it.
Exactly. The only way to do it is grow our way out of it, which of course means money printing.
Here we are again.
So here we are. We're back to the same. So as a Bitcoin holder, that says to me, either road we take will be good for Bitcoin. I mean, it might lead to the collapse of the country, but Bitcoin will be doing okay.
The thing that stands out to me about the government shutdown right now is, to me, I think when I look at all of this, and the Milk Road team had sort of a similar take in their newsletter, is that it's a lot of noise right now. It is going to be all over the media. It's all anyone talks about. But when you zoom out and you look at past shutdowns, historically, the market actually often welcomes shutdowns. Bitcoin and gold, a little bit more unclear. Sometimes they react differently, but the S&P 500, as you show here in all these stats, has historically performed very well. But right now, my general take on this shutdown is that it's going to be a nothing burger, and we're going to be sitting here a month from now and nothing will have changed. But what is interesting is the timing of this shutdown relative to some economic data that will impact the next FOMC meeting and their decisions. Because if if this government shutdown persists, then we don't get economic data. And the Fed uses that economic data to make their decisions in their FOMC meetings. And we're all watching that next. I think Polymarket has the odds of a rate cut coming at the next FOMC meeting at, I think it's like 80% or something in that range. It's pretty high. And so what happens if this government shutdown persists and we don't get economic data? Does that impact their ability to make decisions on rate cuts? That's the one thing that I could see having an effect out of this, but I don't know if you have any thoughts on that.
Yeah, from a market reaction perspective, I think that the market is becoming less and less trustful of the government data. So the fact that it's not available may actually be a good thing and not necessarily a bad thing, because nobody believes it anymore. We just saw in the last few weeks the government revised downward the jobs projections by nearly a million jobs, which is quite a lot. And so I think a lot of people,
it happens, and it
just put their hands said, "Well, what
are we doing here?
If your data's junk."
Yeah, and that's been happening for years. It's not like this is a new thing since Trump came into office. This was happening when the Dems were in office too. So it's, again, it all comes back to sort of this general point that you keep making, which is maybe a nice tie into the conversation around Bitcoin and gold, but which is that there's nothing that seems to change, regardless of who the administration is, towards the attitude around how the U.S. is going to economically make their economy grow. It is just we're going to continue to spend because we cannot, we have no other way to deal with our debt. And so the outcome.
Even if Doge had been wildly successful, it would have been a drop in the bucket, because most of the government spending is entitlements. It's Social Security, Medicare and Medicaid, and then defense. And then, of course, now, thanks to all of our spending, it's interest on the debt. So we can cut things, and we can cut programs and foreign aid and things like that, and medical research and all the boondoggles the government does, and it's a drop in the bucket. It's not going to make a difference. We have painted ourselves into a corner where we have so much debt, and it's not just the United States, although we're a quarter of the global economy. It's most countries are drowning in debt. The average debt per person in the world now, this data just came out this morning, $43,000 per person.
Per person is the average? Whoa.
Yeah. Which is wild, considering that a lot of countries, their annual income is a couple of $1,000s. So the global debt, and I don't remember what it is in the United States, just U.S. debt per person is like $250,000 per person. So the U.S. is in big trouble. There are countries that are in bigger trouble, but the world is in trouble, and personal consumers are in trouble because credit card debt is at an all-time high, student loan debt all-time high, auto debt all-time high. The housing market is not in great shape. So I don't want to be pessimistic about everything, but the debt is a serious problem globally, from a corporate standpoint, government standpoint, and personal standpoint, because rates were held at zero for so long, for basically 20 years. It gave everybody permission to go out and borrow everything. And now the tab has come, and it's time to pay. And we've got some serious choices to make. We either raise taxes, we cut spending, or we print. So cutting spending, we tried that. That's not going to work. We can only raise taxes so much because we're at the upper end of the Laffer curve already. And I don't know if Americans are going to go for more taxes.
Who wants more taxes, right?
Yeah,
it's the hardest political move for anyone to make. So it's not,
neither party wants to cut entitlements. That's
a big no. Yeah, you're out.
You're never going to get elected. So the only way out is either growing with AI and robotics, which of course is happening.
It's happening.
Or you just keep printing, which is also happening. And the M2 money supply is up and to the right. It's just going more and more growing. It's slowed down a little bit the last few months, but the global money supply and the U.S. money supply is just up and to the right the whole way. And that's a big reason why gold is doing so well, is because the economy is different than the debt, but the debt is going up so quickly that investors, they're not buying bonds. The government is having a hard time buying bonds. In fact, the last bond sale, the Treasury had to buy most of the bonds, or some of the bonds. We didn't sell all of them, and this is happening more and more. Foreign companies don't want the bonds, so investors are moving more toward gold, buying gold. And on top of that, the BRICS countries that are rumored to be coming out with a gold-backed currency to rival the dollar hegemony. So China is buying fewer treasuries. They used to be a big buyer of treasuries. They are buying less and less every year the last 10 years. And we used to talk about China owning the U.S. They're not really interested anymore because our debt is terrible. And so they're buying most of the gold right now, which is why gold just it hits high after high every week.
Yeah.
And it continues to go higher. And a lot of analysts are calling for crazy prices for gold. So M2 money supply is going up and up. Gold is going up and up. The stock market is going up and up. But Bitcoin is going up less.
Is going up less. Okay, let's talk about that.
Let's show a chart, if I can share my screen here, about that. So here you can see if gold kept pace with the money supply, it would be the red line. And if it kept pace with M2 in 2011, it would be up there. So you can see even gold is lagging M2. So why is Bitcoin lagging everything? Everything is hitting a new all-time high. Gold, the stock market, the NASDAQ, the M2 money supply, everything is hitting an all-time high at the same time when rates are high. So what's going to happen in Q4? Q4 is historically the quarter of the year where crypto does the best. And I've got let me see I've got so many charts here. You can see here, this is gold. U.S. gold reserves are at $1 trillion for the first time in history. So even the U.S. is buying gold. Everybody's buying gold. Why are they buying gold? It's because of the debt.
Yeah, safe haven asset. Nobody trusts bonds anymore, and everybody wants to get out of bonds. And so there is a shift happening in the global financial regime happening right in front of us, and we're all seeing it. And there's, Ray Dalio has been talking about it for years, and but it comes back to this question of why is Bitcoin lagging?
What's your thesis? I'll tell you mine.
My thesis is that it's lagging because it always lags. It always lags a few months. So this is a typical pattern, and it will catch up.
Yeah, I 100% agree. I've seen data that has shown that it lags historically by 100 days. So if you just put a chart of gold on top, you go to TradingView, put a chart of gold and a chart of gold on top of each other, you'll see that, and move them over 100 days, they're very correlated. Yeah. So
which would say that in Q4, Bitcoin's going to do very well.
Yeah, it should. In fact, since the end of, I'm looking at my TradingView here, since the end of August, Bitcoin Bitcoin priced in gold has been going down. So I think that will start to turn up now that we're in Q4, and as the further rate cuts happen, maybe the government shutdown will help. But Q4 is historically the strongest of all the quarters. Let me just look up a chart here. So I've got Q4 average returns from 2013 to 2024 are 85.5%. And of course, Bitcoin was different almost 10 years ago. So I don't think we're going to see 85% in Q4.
Yeah, 85%. What would that put us at? That would put us at about 200,000, maybe just below 200,000.
But if you look at just the last few years, it's been about 40%, which is pretty great. But compared to Q3, the average from 2013 to 2024 is 5%. So that's a big difference.
And I think that is the thing that investors need to remember right now is patience is so important. as an investor, and I know you preach this a lot in your newsletter and in everything that you produce as an investor, is so easy to get caught up, especially for investors in crypto, where it's a very volatile market, and in market psychology, and I want to talk later in the episode about market psychology as well, can come really into play. But these are those moments where it's very easy to make quick decisions because you are impatient and you're not seeing what you want to see, and you're not seeing the gains, and everything is still on track for a great end of the year. And for Bitcoin and crypto, I think everyone needs to remember is like, a lot of our listeners are going to hold Bitcoin, but they're going to hold other crypto assets as well. And we need first Bitcoin to do well, and then we need Ethereum to do well, and then everything else follows. And so everybody, whether you're in Bitcoin, Ethereum, or maybe you're down the stack, everybody should be rooting for all of them to do well, because that is the way that the whole asset class increases and grows. And so we need that. But it feels very much like everything you're saying, with M2 money supply up, with gold up, that Bitcoin typically lagging, that Bitcoin should have a great Q4, which should lead the rest of crypto to have a good Q4 as well.
Yeah, I agree with you about patience. I've heard or seen a lot of people online disappointed, a lot of Bitcoiners disappointed that we haven't gone up, even though we're up, I think, 75% in the last 12 months.
I was going to say, like, is that enough?
Yeah, I think the last couple bull runs, we've been a little bit spoiled. Coming from the traditional world, I started my career in the mid 90s, and I was a financial planner. And if you got 12%, then that was an awesome year. If you got 12% in equities, which is the average, you're having a great year. And then Bitcoin came around, and it melted everybody's brains who was in Bitcoin. We've seen some phenomenal returns from Bitcoin and other asset classes, and I think it's warped us a little bit to expect that. Even now, the projected CAGR of Bitcoin is like, I don't know, 50% or 60% or whatever.
Yes, it's somewhere between. It depends on who you ask, but it ranges from 40 to 60%.
So those kind of expectations kind of warp our minds a little bit, especially in the short term. You see big moves up and down. You go back to an index fund, and it's like holding cash almost compared to Bitcoin. You're like, okay, this is pretty boring. I need to get back into the meme stocks where I can actually make some money. But the wealth is made in long-term holds.
In patience,
holding patiently and dollar cost averaging into solid assets. The best example I can think of is Warren Buffett. The reason why he's so wealthy is because he's almost 100 years old, and he's been doing this since he was
for 70 years or something.
Right? Like he wasn't that wealthy when he was 60, and most of his wealth has come in the last couple of decades because he just kept going.
Compounding, right? Compounding plus patience.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Let's go beyond this quarter. So you're clearly bullish for Q4. You like the setup. You talked about the reasons why you like the setup. What are your thoughts when you take a step even further back and you think about 2026 and market cycles? Seem to be, as we said, there seems to be a lot of models aren't working anymore. A lot of frameworks aren't working anymore. There's an incredible divide. There's the the bulls are loud and the bears are loud. How do you frame the market right now when you look beyond this year?
Before we do that, I would just caveat Q4 with there could be black swan events that we need to be looking out for.
Okay.
There could be Ukraine, Russia seems to be having some issues that could cause some problems with the incursions into NATO, or Israel and Gaza, which there was some hopeful news with a proposal that came out yesterday. So we'll see about that. But and then of course there's a lot of turmoil happening in the U.S. Those three things could derail everything. So we have to continue. We have to look at that, as I'm hopeful for Q4 and 2026 and into 2027. I think there are a lot of great things happening, but we've got kind of two worlds. We've got the markets. There's a lot of great things happening with the rate cuts starting a couple weeks ago, and a lot of technology with AI and robotics, and a lot of cool stuff is happening. A lot of assets being tokenized with crypto, and the government even talking about putting some data on crypto. So a lot of that is happening. But then at the same time, we keep hearing about World War III and Civil War. So we kind of have to hold these two ideas in our head at the same time.
How do you plan for black swan events as an investor? It's a very difficult thing to plan for and manage.
Yeah, it is tough. I don't have the golden solution other than keeping perspective, because a lot of this news comes out and the markets tank one day, and then the next week they're right back up. Remember the tariff issues in early April, and everybody was freaking out. The market tanked, and about 45 days later, we were making all-time highs. Mm-hmm. So I think one of the things is just trying to keep your wits about you and taking a perspective. And if you're an investor, having most of your portfolio in good, solid, long-term investments. If you're perping, or if you're in meme stocks or something, then a big dive could really help you. So you got to keep your leverage way low, and any leverage plays short term and low leverage, because anything could come and blow you up. And a small percentage of your portfolio, less than 2% of your portfolio should be any kind of leverage or perp. Mm-hmm. And I would say less than 20% should be, as you call it, down the stack, mm-hmm. right? Most mm-hmm. of your assets should be in the top 10 cryptos, or an index fund, or a major technology company. Because then when something like that happens, it's okay, because it's going to go back.
It'll come back. Yeah. The things that will be here 10 years from now are the things that should be the majority of your portfolio, unless you want to go be a trader, which is just a completely different perspective on the way you manage your money. But for most people, investing is the way to go. Everybody who tries trading realizes pretty quickly that it's not a good choice in career.
Yeah, it's very difficult, and 95% of traders lose money, mm-hmm. which is why it should only be a small portion of your portfolio, even if you are a full-time trader. And most of what I learned as a financial planner is most of the things that lead to success are consistently dollar cost averaging into a good asset, and taking a long-term view, and not losing your mind when something happens. Mm-hmm. There was a study that Fidelity did. They looked at which portfolios of their clients did the best, and they found that it was people that had died that just had their money on the platform. And they concluded the reason that those dead accounts did so well is because they didn't trade. They didn't freak out. They didn't, when something happened, they didn't rush to sell at the bottom because they're dead, obviously, right?
That is an incredible stat. That is incredible.
Yeah, it's amazing. So when big news events happen, most of the time the answer is to what should I do now is do nothing.
Do nothing.
Yeah, and that's okay. You don't have to be trying to time the market and trade and everything, especially if you're owning Bitcoin for the long run. Most of the time, it's just do nothing.
Yeah, and have a solid financial setup that allows you, and I know you talk a lot about financial independence, that allows you to be comfortable in both bear markets and in downturns. Because if we have and we will have another bear market. It is inevitable. When that comes is definitely up for debate right now. I think there's some people. No, I've not talked to anybody who seems to think that the bull market is going to end this year anymore. Everybody is now believing it's going to extend it into 2026. Where I see a lot of variability is some say Q1 2026 will end. Some think it could even go into 2027, really depending upon the election and rate cuts and what happens with the Fed. There's a lot of variables. Mainly on the macro side is where everyone is kind of wondering what happens, and we'll have to wait and see. But when we do get a bear market or a pullback, which if the bull market did extend into late 2026 or 2027, I can guarantee you we would see some large pullbacks along the way there. And like, I'm talking like Bitcoin 30% type pullbacks, right? And those type of pullbacks if you are affected by those pullbacks and you start to think, oh gosh, like I need money day to day to survive, then you should redo your allocation of your finances and how much is in saving and how much is in cash, because you need to have that fortitude to withstand those pullbacks.
Yeah, 100%. And financial planners will tell you to do the 3-bucket strategy, which is short-term money, medium-term money, and long-term money. So your short-term money is money you're going to need in the next 6 months, which is mostly cash. Have some money in some cash or liquid investments. So if the market does go down, you don't have to sell anything. You don't have to touch your Bitcoin. And then your medium-term money is money that you might need in the next few years. And then long-term money is 3 years and beyond. That's your core stack of Bitcoin or whatever your core holdings are that you don't plan on touching for 10 years. So if you have those 3 different buckets, then if the market does tank, you don't have to worry about your medium and long-term money because it can go down. Exactly. It can lose 30% of its value. And you can take some of that cash and buy the dip, right? You don't have to.
That's right. So I always need some dry powder on the side to be able to buy.
That's right. Yeah. Because those black swans, you never know when something's going to come out of the blue. And it might not be 30%, but it could be 5-10%. And you don't want to be caught off guard, off sides, and have to sell something and miss out on that opportunity to actually buy.
So last question before we wrap here. What is your thesis for 2026 and beyond and for this market cycle? And any thoughts on any price predictions on Bitcoin? I know price predictions are a bit of a throw a finger in the wind type of thing, but it's always fun to ask.
So I'm planning through 2030. And I think the biggest trends through 2030 are going to be on the crypto side is Bitcoin, obviously. And then Solana, I think is, and a lot of people love or hate Solana. So I think a lot of the volume is on Solana. A lot of real world assets are going on to Solana. So I think that's something to watch. And then on the stock side is robotics and AI, embodied AI, humanoid robotics. I think that is going to be huge. The only U.S. public company where you can buy into that right now is Tesla. On the humanoid robotics, and then a lot of AI plays, and that's changing all the time. But I think those trends are going to be mostly what I'm watching through 2030 is the M2 money printing, and which relates to Bitcoin. A lot of things going onto the blockchain, which is mostly happening on Solana right now, and that could be different next year. So you got to watch it because everybody's vying for that spot. And then humanoid robotics and AI, which of course is driving the whole equities market right now. Yeah.
I love all those investments. Those are all very much in line with our thoughts and our beliefs as well. And I think nice. I think if that's where you're positioning, I think you're really well set up for the next 2030 and even beyond. It is clear that Bitcoin is here to stay. It is clear that Solana is here to stay and will play a role in the future of finance and the future of public blockchains and Ethereum as well. I think there's a lot of benefit to be invested in both of those. Trajan, absolute pleasure to get you on the show today. Thanks so much for joining us.
Thanks for having me, Jay. Happy to come back anytime. This has been a lot of fun.
Thanks for listening in, everybody. I've got to remind you, as always, none of today's episode is financial advice. This episode is for educational information purposes only. Appreciate you listening in. And if you want to learn more about the market, the government shutdown, go check out the Milk Road Macro newsletter. Link is in the show notes. Tomorrow, we're going to be back with Nick Dukoff, the head of institutional growth at Solana. So we'll dive deeper into Solana and what they are doing on the institutional side. Have a wicked awesome day. Thanks again, folks. We'll see you back tomorrow. We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.